Chainlink Friday, September 26th. Let's get to it. We're going to go on the weekly chart first. We'll look at what we want to watch for the weekly close in a couple days. And then we'll zoom into the shorter time frames to see the key levels that we need to hold for the next 48 hours till we get that weekly close. And focus on, what comes next if we get to hold, if we don't, all that and more. If you liked the video, give us a thumbs up. If you want more help with this cycle, exiting, entering, educational content, consider subscribing through Patreon, trying that out, and let's get right to it. All those linked below. Okay, so weekly chart, we're at 2050 after coming within 20 cents of the 21 EMA in the yellow here. Previous range highs back here. Is this typical? Well, of course. This is still in bull flag formation here, but we do need to hold this level, right? We do need to hold. We've said that for weeks now. And we've also said, I encourage you, if you didn't watch my mid-August, late August videos, I said there's a very great possibility we could hold here and go back down and mirror image this W pattern. W patterns are often breakouts, but they often rhyme with the left side. And now we're doing just that. So holding resistance here, we've looked at this many times. Watch all these videos, right? A rhyme with this. Just redo this if you're wondering, right? This is the likely next path. Now, it doesn't mean immediate bounce from here and never looking down again, right? We could easily do one of these numbers where we kind of bounce here, go back up, and then come back down, and then go up. And you might say, well, we didn't do that over here. Well, sure we did. Put on closing prices. See that? Little W. Takes some time. Doesn't mean we have to go immediately up, but for the most part, we would be going up, right? See that jagged W there? Okay, so it could take a majority of October to really break into new highs, but I would expect within the next 30 days, we see Chainlink at cycle highs again. Plain and simple. Now, where will we start to lose that narrative and get a little bit more worried? Well, obviously, if we start to fall apart on the W and we start to close under the 21 week, under $19, we take out this low, we're in a world of hurt here. But I give that very low probability because this is, like I've said many times, this is a bullish breakout pattern, often rhymes with the left side to the right side and then never looks back. Right? This is the start of the W up here, not down here. So this is not next to follow, right? This is the build into this pattern. All right, so we should go back up here within the next, could be next week, could be next month, could be a month from now. But sometime in the next roughly 30 days, I'm fully expecting Chainlink to have a 3 in front of it. Okay, if we can make that as clear as crystal. Alrighty, that's the weekly. Only goal this week is to hold above the 21 week. A good chance we get it. All right, let's move in a little bit. How about the 3-day? We've moved down a little bit, but we're still within these range highs. Previous range highs, move down to the 21, break up, previous range highs, new range lows. There's the 50 EMA, which is the 150-day moving average, FYI. That's at 1950, which is your high close back here. So if we go down a little bit more, right, we've said for weeks now, in every damn video, we're looking for a kind of a low, potentially around the $19.50 to $20 level. This is significant even on a monthly chart. Just go look at that real fast. $19.50 to $20. If you've missed any of those videos. Going back for 5 years now, we can look at our initial high wick here. First time we ever saw $20 back in August of 2020. Our low close sell-off from the all-time highs, right? Our bear market plunge, again, rejected off of that level. Our new initial 2024 cycle highs in March, those right there. Did the significance of this? Many key touch points over years. So that's, again, the 1950 levels. Okay, from a macro perspective on the monthly here, though, The moving averages have been coiled up for the past several months and looking to accelerate to a grand finale per se. All right, so that's the monthly. Let's go way in now. Let's go to the daily. We'll keep that line on there so you can see where we're at. That's the same line going back 5 years. See the significance of that line? It's almost like destined to come back to there. And we've gotten within pennies of that. So do we have to go lower? No. Could we wick even a little bit under? Sure. But we don't want to close multiple days under here. Certainly a weekly candle under here. That would be bad. But you can see a major moving average at 200, the 200-day EMA right there. Could we see a wick there? Perhaps. That's about it. That would be kind of my worst case. If we start going under that, again, there's trouble in paradise, yeah? But the fact that we've kind of sold off pretty aggressively here, and certainly over the past this week of Chainlink, right? Whoops. Hit the right buttons, bud. Even in the past, this entire week, we've sold off 20% from high wicks to low wicks. That's a pretty aggressive sell-off. Right back to previous range highs. We could absolutely see a low already being in, or either very close. Let's check the Bollinger Bands. We want to be at the lower Bollinger Band, where prices are low by definition. We'll see if that pops up anytime this entry. And there we go. So we've now pierced outside the lower Bollinger Band the past several days. So this gives me more conviction of a low being very nearby. We'd like to see that top Bollinger Band kind of, it's trying to curl over here, right? That would signal the end of this downtrend move in all likelihood. Now remember, a majority of our price action, like over 80%, happens within the Bollinger Bands on any asset. So if you start to get multiple like daily closes outside of it on high or low, you're likely going to come back in very soon. So if we do that over the next 48 hours, now through Monday, you see a bounce, well, you got to look for a close above the EMA 8. That's usually your first test. Did you bounce and close above, or did you reject, or your previous swing lows? So that would be $22. You see the 50 EMA right there, the 14 EMA right there. So we could even put that as a zone, not just a harsh line. So between the EMA 8, this will be moving throughout the next 24 to 48 hours. The lows will be. But somewhere between the EMA 8 and $22, the previous swing low close, will be our resistance. So if we break through that and you see Chainlink prices above $22, that's very bullish. Certainly on this move, we could see a pretty nice slingshot. And then if we overcome 22, we're not looking at anything other than range highs here. So it would probably go to immediately $25. If we start to close above 22, we would look at a nice little jump there in all likelihood. Now, I know it doesn't seem like that with the emotional status of this week, with prices falling all week, but we're rounding out September. We're doing, structurally, we're still intact across all time frames that we've looked at, right? Right. Everything else looks A-okay. Structurally wise on Bitcoin, structurally wise on Ethereum, all the total 3 market cap, everything looks still contextually perfect structure wise for a great Q4. What happens between now and the next week, 2 weeks, who cares? High probability of a very good Q4. Whether or not that gets off very quickly or slowly, we don't know. But watch Chainlink. Chainlink could be a nice little heads up or a pivot. Watch Ethereum, Solana. Those are 3 big ones to watch for, even if you don't have any of them, which I assume if you're watching this video, you have some Chainlink. But Ethereum and Solana are good keys to be watching for a alt rally. Okay, if you want more on that, again, Patreon. I do educational updates there every day on Bitcoin. You get the ability to request whatever the hell you want at any time, all times. Meme coins, we talk about memes in there. Tether dominance, DXY, Bitcoin dominance, all that stuff. That's where we do that at. So if you want to see stuff other than Chainlink, that's how you do it. Otherwise, I'll see you on the next one for Chainlink. And let's get to our quote and card of the day for this fine Friday. The past always looks better than it was. It's only pleasant because it isn't here. I agree, somewhat. Although I do think times were pretty much easier 20, 30 years ago. If you grew up back in the late 90s, I think everything was pretty great back then. Early 2000s, prior 2001, things were pretty great. Since then, we've gotten a little bit rocky, but maybe it's just the social media thing lambasting us, right? All right, card of the day. Let's leave the past in the past, and we'll revisit the past right now. 2007 Lamborghini Murcielago. This was my favorite in high school. This is my favorite car in the world. I have many model cars of this one. And if you didn't know, Murcielago means bat. So why not get it in black? Of course, the black bat. So cool. Now, this is slightly overpriced. I don't know what this guy is on, but now the starting MSRP on these back in early 2000s was about three to 400,000. That's pretty good ROI. Now, sadly, you can't drive these very much if you want the value to hold. You certainly can't wreck them, scratch them. So I assume this guy's in pretty good flow. He only 8,000 miles on this, which is still, I don't say it's high, but for asking $2 million for something it's 20 years old, I think that's a little high. But this one's in pretty phenomenal shape for, again, being almost 20 years old. Yellow stitching inside. Definitely kept this garage because there's no fading on any of the interior and the carbon. That would be the first thing to go. Headlights are still flawless looking like. So yeah, he's got a really well maintained one here. But $2 mil, this is the highest price one I've ever seen. So I had to do car of the day on this one. Murcielago for $2 million. Now it is gated too, so manual shift that's a bonus too. It's probably pretty rare to find that. So great condition, but I'd rather have you could buy 2 or 3. You could buy a brand new McLaren, a brand new Ferrari, and a brand new Lamborghini. Obviously not the high end ones, but you can still buy all 3 of those for less than $2 million. I think I'd go with that. All right, that's just me, maybe. You can buy 3 brand new supercars for the price of this 20-year-old slower one. Not for me. You'd have to really be in for a. I mean, this would have to be perfection for you for $2 mil. All right. Have a great weekend. I'll see you on the next one.